Good morning, everyone, and welcome everybody in all directions from us in Munich. And we would like to welcome you to today's live session on the topic China trade, regulation of the market, and intellectual property. My name is Sophia Fuchs, and today I will talk together with my colleague Leo about the current developments in the market regulation. My name is Sophia Fuchs, and today I will talk together with my colleague Leo about the current developments in market regulations separately, as well as in the field of IP rights. As you can see here, we have four different service lines. CHINABRAND is a service provider offering China-specific services in the areas on the one side of anti-counterfeiting and piracy, as well as IP and know-how, but also we are working in the field of cybersecurity and data protection. Besides, we are covering the fields of innovation and competition in China. So with today's webinar, we are at our first two services here, and let's jump right in. But first, briefly, a few words on the housekeeping. So you have on the right, you have the toolbox. You can there check your sounds, but also enter your questions when there are any during the webinar, which we will answer collectively after the webinar in the end. And as the question is always rising very often, we are very happy to send you the slides afterwards, and we will send you the follow-up, including a link to the full recording on our YouTube channel, on which you can also find many more videos on related topics. So it's currently the media, it's about China crash, growth, slump, lockdown, easing, second lockdown, and so on and so on. So now we were also hearing a very few small positive news that Shanghai tried to slowly doing some small easing of the lockdown, and currently, especially for the companies and even more relevant for the people living there in the cities, there is just a lot of uncertainty, worries, and also fear. So, but what it's also somewhat overplayed by the bad press, and bad press is the good press. So the good news is not even mentioned, of course, because there's like way too much horrific situations going on. And let's have a more economic view on the figures on the business. So the figures and the growth that China is can still achieve despite the current situation hardly come into light. So there are so many bad news that are like overwhelming all the others, but it is, of course, there is so much difficulty, but in comparison to the other countries, China is performing comparably good. So there is no question at all that the current quarter is probably going to be very, very difficult for the economy in China. But basically, in the first quarter of this year, it was the most horrific one with all the big lockdowns for the country in years. But compared here, the forecast for Germany has been lowered to 3%, and for example, other countries like the United States, actually they have no growth at all anymore. They're in negative territory, going to recession and facing inflation. If you just compare that China's economy somehow grow about 5%, is crazy. It is still 5% in such an economic engine of the whole world. So if you do not look at these numbers here, despite the current quarter and the current circumstances, China is actually performing quite well in the world comparison. And on the right, you can see a chart of China's share of the global GDP, and it's very clear that the growth rates are very, very high in the last years. And there at the end, because of beginning with the COVID pandemic, and it's very clear that the growth rate and the trend will go on. And in the long run, China alone, measured by experts, will generate about 1/3 of the complete global growth. So as you can see here, there are many very different factors which are very often interrelated and correlated, and there are some kind of positive factors and also many hurdles. If you look on the small picture on the left, the economic growth, as I already said, there is one dip, like the negative growth in 2020, which is the first lockdown, and also the numbers for the current lockdowns might be the same for this quarter or in this area. But all in all, the growth numbers, besides the one dip, are positive, and the GDP growth and the market in China is immense. The second is the foreign direct investment growth. So it is against everyone's thoughts, but the FDI growth between 2020 and the year before grew by a full 10%, which is incredible. This is a very high growth rate for such a time. So here it's clear it means that despite all the crisis, which is not only in China, there is a very great urge for the companies to go to China, to still go to China and grow the investments there. So this is also a trend we see with our clients, that there is no retreat and the urge is very great. The desire and also to continue participating in the market is actually still there, and it will not just like go away, even though the tensions currently are high. And talking about tensions, I would like to come to the point of geopolitical risks. As you know, there are many different factors, like worldwide. It's very difficult at the moment between different countries. Currently, we also have war in Europe. So there are many things and issues that are risky for the companies, and they have to be very fast thinking and also very flexible in these times. Besides, there, as you know, there's an aspiration towards self-sufficiency of China, which seems to be one of the biggest risks or one of the biggest fears, not only of the companies working or doing business with or in China, but also this is a risk for other countries worldwide. But it is very important for foreign companies to understand that this one self-sufficiency, or let me say this one economic self-sufficiency of the Middle Kingdom, this does not mean that foreign companies will be forcibly or completely executed in the next years. So just because the country can be self-sufficient does not mean that they will completely excluded of the whole company and all the markets. And besides, on these topics or arguments, there are some publications of the authorities, but I will get to that later. So the point or the points that are probably causing the most problems for all of us or for the companies worldwide, foreign companies investing or doing business with or in China, are that the supply chains have been disrupted for actually for a very long time now. So it's more than over 2 years, but especially the connections with the lockdowns in China and this very difficult to handle zero COVID policy makes the trade and the supply chain disruption on a very tough level. And actually, within the last month, the situation has come to a head. We know that Shanghai is full of containers, and by handling, this is the world's largest port. There are hundreds of container ships ready to unload, and And experts guess that this will take several months, that it will come like back to near to normality, and the companies worldwide are highly affected by this. So we see some parts, we see empty shelves also here in Germany, and this is one of the biggest points for companies to handle. And on top of that, in terms of the global economy, there are many countries that have imposed import or export bans on certain goods, like depending on food in India, or also in scope of the war in Europe, that there are bans. Also resources like materials for the chips we see in the automotive industry. There are so many examples, and in combination of that with also the very high costs and increasing prices for oil, gas, and in the international freight, it is very, very needed that companies try to figure out a new strategy, or like how to change in this time. But now I would like to come to what is subordinate to all this. So mainly the goal that China is pursuing is, which is above all else, is to strengthen the middle of the society by regulating trade. So we can see this as a headline, and there are many sub-measurements below that. So today we do not want to focus only here on the pandemic, but on this multitude of new laws, regulation, rules, and yes, all the recommendations that are not even mandated yet. So what are the goals, and how do the company get all of the goals, or at least how to find a red line in all of these laws and goals, regulations, and rules? And to find a scope, it's very clear that China has now had one of the most difficult years in history. So therefore, it is kind of understandably that the country, in an economic perspective and also in a social perspective, is looking, especially in this regard, for stability. And how, or are the policymakers seeking or trying to seek the sustainable economic growth? So in the eyes of the politics in China, it could be done with a little bit more of laws and regulations, and also especially regarding the very, very big companies over there. And on the one hand, it should be done with more justice in the economy and also in society. And exactly where, as you know, we have seen a very big process China made in the recent year, and it's very clear from the economic point of view that there will be also very big changes in the future, and this very high growth, of course, cannot continue forever. This is like a very logic calculation of economic development, and therefore it is that's why striving for really sustainable economic growth is actually reasonable, but it's of course difficult to make the impact on it. And if you just compare here, you can see the numbers. If you just compare that with the forecast that by about 2025 there will be 500 to 600 million people in the middle income group. So this means that the people in the middle income group are getting more and more on the one hand, and on the other hand, besides the crisis, there's population growth. So the market, even there is crisis worldwide, the development is immense. So for companies, actually it's really hard to compare with other countries or to understand what this market share is. So we see actually there's an enormous wave rolling in and an enormous demand wave in goods and services that also we can serve with our exports from Western countries to China, or selling from China in China very well. That means that the market potential and the urge to go to China is unchanged and very big. So there is a question that comes up very often also with our clients or in discussions, especially in the whole construct of the economy strengthening of the single market, and the market of China should be stronger. How does this fit together with not being or working bad against foreign companies? So actually there are very many regulations and laws and also measures that the China's domestic market is strengthened, but on the other hand, there are also opinions and reports that it should be done a lot from political side for companies, that foreign companies will not be excluded, and that there will be regularly reviews of the equal treatment of domestic and foreign companies. So actually we know, and also from our experience, and it's not a big deal to say, it's not always in China the things between the theory, how it should be and how it is in practice, especially, and there are many small issues where foreign companies have bigger hurdles to do than domestic companies. But in general, this is a very clear statement that it is not foreseeable in the very near future that foreign companies have to leave the market. So this is definitely something we can say. And it is therefore, there are some points. The social credit system, for example, is one of the systems, as well as trade restrictions or the cybersecurity law, which is now into force for several years now, relatively new, the data security law and personal information protection law. So you can see here are many, like, if you can say, smaller strategies which build from political or economic side of view one big protection system for one unified domestic market. And in all that point, there are many laws and guidelines going on, depending on in what field or industry you work. You might know many of them, and also point out like accelerating the digital transformation or unifying the IP protection system. And my colleague Lulu will talk later about this. And this leads to some points to think about what can Western companies do. So our competitive advantage, and also there is a very high and more high growth potential growth rate in the market itself, as I already mentioned. But all in all, it's really important, and I want to focus on this again. It is important that companies understand this, that this strengthening of the unified domestic market in China does not mean that foreign companies will be excluded. And there are three different ways, which brings me to the next slide, how companies Western companies, foreign companies working in or with China can adjust now on these new whole strategies. So the long-term strategy of Western companies in the context of the overall strengthening of the international market and trade is actually 3 pillars. We have on the base controlling localization of value creation. Then we have more integration in the network in China directly and more adaptivity of the company. So the foundation just mentioned is the controlling the localization of the value creation. This means that companies should try to localize as much as possible in China. Could relocate R&D or maybe separate R&D or separate R&D between Western markets and Chinese markets, or what we say very easy, as much as needed, but as little as possible. And then, of course, the question arises, what does as much as needed mean? And there's no rule or guideline or paper for this, neither for industry nor for the company size, but it may be that there are different opportunities arising, just for example, relocating a part of the production or only a part of R&D. And just if you or the company does not have a full daughter company on site, it just might be the relocalization of the value creation partly. One example where we also see very, very clearly that this localization or controlled localization is highly relevant now and will be key in the future. And this is like a very slow ongoing process. Just recently a client of us reported they tried to participate in a public tender just as usual, and by clicking through the many pages, filling in the blanks, and after some pages there came, as usual, the question, is the good coming from abroad? Where is it produced? Is it import or export? And as our client just clicked, products are imported, the whole public tender closed and kicked the company out of the public tender, which is actually the public tenders are highly relevant for many companies. So here we can see how the companies are influenced by this. And with that, you can see that the company, the core, is the localization of the value creation. And in the long run, especially we in Europe are very, very good in selling from Europe to China, but in the long run, it might be that this is not the solution anymore. So the second point is to put or increase the efforts of more integration. This means that companies take care of building like a strong integration on the ground, like on site in China. And actually, this is not that easy. The best way is networking going on with collaboration with universities, with universities, with other companies. So maybe trying to build up some social responsibility. It could be, I don't know, kindergarten for the employees, or building constructions in collaboration, or using machines in collaborations. So as soon or as long as you are integrated there, and if you're needed from the economic perspective as well as the social perspective, companies have very, very high chances. Just a very recent example to that point. Now during COVID and the lockdown times is sadly not over yet, but to give an example, company Class and also the company Hans Grohe, they have just recently reported that they were not sending their employees to production, and even because of the closure, they didn't cut their wages. They will not fire the employees. And of course, this is for the big companies, this is a very high point of costs, but is very clear that in the long term, there is a very high level of social interest and social responsibility shown by the companies. And actually, this is exactly which is becoming more and more important in China. It's not only about making money, making business, it's also about going the extra mile, which is not forced by law, like a little bit going in the center of the economy. And this is exactly what companies like Klaas and Hans Grohe did. This is also a long-going process. There is no need to run, or like this is not a sprint, this is a marathon. There you have to run and run and run and go in there and change and adjust. And on top of the needed adjustment of Western companies doing business in long run in China is the adaptivity. So there are new laws, changing laws, compliance regulations. We have clients and they say, I don't know today what I'm allowed or what I need to do tomorrow. This is not only by the laws, it's also driven by the war and the pandemic. So actually, if you are on top, you as a company, if you can show a very high level of flexibility, adaptivity, and very fast and short communication, and then you have a very high chance to really succeed. So just to give one example here, and one very positive example, despite the lockdown and also in China, like if you have some goods that are needed from the economy, or if your business is really influencing the social life or economy, then also by the authorities, China will help you very, very fast. So there were spare parts from a company stuck in one of the container ships in front of the Shanghai harbor. And these spare parts were highly relevant for harvesting the corn just a few weeks ago. And just within 48 hours, which is really enormous, the container was loaded by the ship and all the spare parts came out of the container, and within 48 hours, the problem was kind of solved. You can see very clear there's also an other side of the view. If you show adaptivity also in combination with social responsibility, you have very high chances in China. And it is also, even though it's not always effortless, and there's really high potential. And with this, I would like to pass the floor to my colleague Liu on the topic of IP.
Thank you, Sophia. Good morning, and my name is Liu. Today, in my part, I will briefly talk about IP update in China 2022, as well as the impact of the current lockdown, the lockdowns and the current economic situation in China on IP field. Before we jump into the topic of my part, I will firstly explain the concept unified IP protection system that my colleague Sophia just now mentioned. In the past few years, China has been criticized for the inconsistent standards for administrative enforcement and jurisdiction, conflicting administrative rulings and judicial decisions, as well as the difficulties for right holders to enforce their IP rights. So China wants to build up a unified IP protection system aiming to harmonize the legislation for the administration and jurisdiction, simplify the procedures for IP right holders to enforce their IP rights, and also improve the IP field from the levels of substantive laws and procedure laws. Actually, in recent years, China has made many improvements in the IP field. As you can see this chart, um, from the legislative perspective, China has made progress. You can see in this chart, China is now in the third phase of improvement. Since 2016, every year, China has made major or minor changes in IP legislation, such as the revisions to the copyright law and patent law, the formal introduction of punitive damages system last year, and insurances of several judicial interpretations on different laws. For example, the interpretation of several issues concerning the application of the anti-unfair competition law this year. So that China wants to, through improving the IP legislation, to create a better legislative environment for IP. This year, another one of the most significant news is China's accession to the Hague system. The Hague Agreement entered into force in China on May 5th, 2022, which means that from that date, with a single international industrial design application, foreign companies can get design protection in multiple countries under Hague system, including China, so that they don't need to file a separate design application in China like they did in the previous years anymore. So the Hague system makes it easier for foreign companies to get design protection in China, but at the same time, it also makes it easier for Chinese applicants to obtain design protection in other countries and through a single international application. It's estimated that foreign companies will can gain more convenience through Hague system, but at the same time, they will also be faced with more competition from Chinese competitors in other countries, in other markets outside of China, which they should also pay attention to. In addition, to support the legislation from the perspective of administrative enforcement, administrative supervision, and monitoring of IP infringement in China will also be strengthened. For example, in the area of copyright, the National Copyright Administration will continue the SWORD 9 2022 action this year. Last year, this action saw over 1,000 million infringing links removed, over 1,000 infringing and pirated websites and apps shut down, and over 1,000 cases of online infringement investigated and dealt with, and so on. And this year, the National Copyright Administration will further strengthen its supervision of the copyright infringement in the key areas of the internet. And in the field of trademarks and patents, the China National Intellectual Property Administration will also further deepen the Blue Sky project to crack down the illegal action of IP agencies, such as the agencies assisting in improper patent applications or trademark registrations in bad faith and or lack of qualification, etc. What's more, there is also a breakthrough in the fight against the trademark registrations in bad faith. In China, trademark squatting, trademark registrations in bad faith has always been a very unpleasant matter for foreign companies and for trademark owners. There are always Chinese applicants who file trademarks which are similar to those of foreign companies in Chinese or Latin in different classes to disturb the market order or to sell these trademarks to foreign companies with a high price. For example, Zwillinge, a famous German brand, which sounds like 双立人 in Chinese, meaning two standing persons. Then there are several malicious trademark registrations, such as 单立人, which also sounds like 双立人, but the meaning is one standing person, and also 三立人, three standing persons, and so on. These funny names, funny trademarks. The common methods for the foreign companies to prevent or to cancel this trademark registration in bad faith is a trademark opposition, a trademark invalidation or cancellation, and even administrative lawsuit. But through these methods, the trademark owners cannot claim compensation for the lawsuit fees they spent on for the trademark opposition and so on. Recently, there's a breakthrough. There is a case Emerson versus Shaman, Ander, and Wang. In this case, the defendants registered trademarks similar to the trademark of Emerson for decades without any intended use, without any actual use. And the plaintiff Emerson has conducted many trademark oppositions and trademark invalidations or even administrative lawsuit to cancel these malicious trademarks. But this defendants didn't stop. So the plaintiff filed a lawsuit based on the unfair competition. The court judged that the actions of the defendants constituted unfair competition, even these trademarks are not actually used. And these defendants should cease and desist from the infringement, as well as compensate the plaintiff for lawyers' fees spent on trademark oppositions, trademark invalidations, and administrative litigation. Which were incurred due to bad faith trademark registrations. In addition, the trademark agency is also jointly responsible for that. And moreover, I would say this case is a breakthrough. Why? Because prior to this case, it was unclear whether simply applying for trademarks in bad faith without any actual use is, for example, the use on product packaging or use on the internet for advertising or use for e-commerce platform complaints against the original trademark owner constituted unfair competition. But with this ruling, the court confirmed for the first time that the trademark squatting without any actual use can be sued as unfair competition. And so the case offered the trademark owners a new method and a new possibility against trademark registrations in bad faith. Last but not least, although China is improving the IPR framework, foreign companies should consider the impact of lockdown at the same time. And as a result of lockdown, frequent lockdowns, many Chinese SMEs have already closed or are even heavily indebted. For example, the company in the picture is already in debt from 2020 to 2022 because of credit disputes with banks. I know that many foreign companies they will frequently conduct the anti-counterfeiting activities in China to protect their brands. On the one hand, it is lockdowns is a kind of good thing for foreign companies because due to lockdown, the factories to produce the counterfeits could be affected and could be shut down or stopped. But on the other hand, if foreign companies want to file a lawsuit against a counterfeiter, it's important to consider the financial situation of the counterfeiter first. If the company is already highly indebted, it may happen that, despite the success of the lawsuit, the judgment cannot be fully enforced. Moreover, due to the economic downturn and the interrupted supply chains, many companies in China might replace the unavailable original products with fakes. Therefore, foreign companies should immediately observe whether their clients, the order volume is normal, and if there's problem, it is best to communicate with clients in advance. In addition, it is estimated that due to lockdowns, the competition from large companies will be increased. Usually, large companies can last longer during lockdowns. Because of frequent lockdowns, many SMEs are already dead. So the larger companies can take over the market share and become more competitive to some extent. It's also a two-sided sword. Foreign companies in China can benefit from that and take over more market share, but the Chinese large companies can do it as well. So foreign companies should watch out the R&D of their large Chinese competitors and make the right decision in product development, as well as in the IPR layout when competing with the Chinese competitors. Finally, there's also something good for foreign companies. Because of the lockdowns, the spread of counterfeit goods from China through cross-border sales was hindered to some extent, which will protect the foreign companies in other countries' markets. And now I will pass the microphone to my colleague Sophia. She will make a summary to today's webinar.
So thank you, Julio, for all the insights in the field of IP, and especially on the current effects on lockdowns and some future use. And as we can see, there are many things, many changes in not only in sort of market regulation and trade regulation in China, but also in field of IP and enforcement. And this is a very complex system. There is on the one side the pandemic, the lockdowns. On the other side, there's big influence on the counterfeit and also on enforcement. And besides, it needs to be considered how's the situation of the counterfeiters. So this is a very big and complex issue where companies need to work on and really have a very close look on the daily or very current developments. So with this, we would like to come to an end, and thank you very much that you have joined our live session today. And whenever you have any comments or questions, also feel free to contact us at any time. If you would like to see other or similar information on that topics, we have our YouTube channel, and we have the premium download on our website. And on the website, you can also find our future events. With this, my colleague Lilian and me, we would like to say goodbye for today, and we wish you a very nice day. See you.
See you. Bye-bye.
Bye-bye.